Today's housing market update is crucial because the Federal Reserve recently began cutting interest rates and plans to continue doing so this year, next year, and into 2026. Let's talk about what this means for mortgage rates and home prices. First, let's look at where we are right now. In the US, the median home price has risen by 46% over the past 5 years, and on a year-over-year basis, prices are up by 3.1%. However, if you look at month-to-month data from July to August, you'll see a slight decline in home prices. But does this mean we're heading for a housing market crash? Personally, I believe this small drop is just seasonal. In fact, we saw similar dips in home prices from July to August in 2021, 2022, and 2023, just like we're seeing in 2024. So, let's clear this up right away. The housing market hasn't crashed. There are some people who have been predicting a crash since 2021, and they're still holding on to that narrative in 2024, but it hasn't happened yet. And to those claiming that prices have already crashed, let me ask, if home prices have crashed, have your property taxes or insurance premiums gone down? Are homes suddenly affordable again? The answer is no. Now that we've established that there hasn't been a housing market crash, let's have a real conversation about mortgage rates and home prices. Last week, the Federal Reserve reduced the federal funds rate from 5.5% to 5.0%. This benchmark rate influences mortgage rates, so typically, when the Fed cuts rates, mortgage rates tend to follow. However, it's not a guarantee. Before the Fed's meeting on September 18th, the market anticipated a rate cut, and mortgage rates began to drop. Reuters even reported that mortgage rates fell to a 2-year low of 6.15%. Looking ahead, the Federal Reserve plans to cut rates again by 0.5% this year, by another full percentage point in 2024, and by 0.5% more in 2026. Unless inflation significantly picks up, rate cuts will continue. Inflation takes time to respond, so even if it does increase, it's not likely to happen immediately. By the first quarter of 2025, I expect mortgage rates to average around 5% for a 30-year fixed-rate loan. That's a big improvement from the peak rates of 7.7% we saw in October last year. While it's unlikely we'll see mortgage rates return to 3%, unless there's another major crisis like a recession, stock market crash, or other unforeseen events, rates should continue trending downward. However, if inflation picks up quickly, the Fed may have to reverse course and raise rates again, which could push mortgage rates back up to 7% or even higher. Now, regarding home prices, if mortgage rates continue to fall, it could boost demand and increase inflationary pressure. This doesn't mean home prices will necessarily skyrocket, but it does mean any declines in prices will likely be smaller, and any increases will happen faster. In my opinion, the Federal Reserve and the government are actually making things worse by inflating what I'd call an everything bubble. This could end badly, though it's hard to predict exactly when. I'm not saying the housing market will crash, but it could become even more inflated. Finally, is now a good time to buy a home? I'll put it like this. Back in 2007, before the housing crash, the median home price was around $240,000. Today, it's about $433,000. So when was the best time to buy a home? The answer is years ago, but today is probably better than tomorrow. If you plan to live in your home for at least 4 years, I'd suggest shopping around for a good deal now. Don't try to time the market. Please subscribe, and thanks for your support. Have a great day.